Welcome back to Fast Market here on the TD Ameritrade Network. And let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder at LikeFolio. Welcome back to the show, Andy. I don't know if we have Andy's audio.
Hey, sorry, thank you for having me.
Oh, yeah, no worries, Andy. Thanks for being here again. So we're talking McDonald's. I kind of wanted to bring this up because sometimes it seems like when inflationary pressures are present, people are pulling back on spending. That will get, more foot traffic in some of the fast food places as opposed to maybe the restaurant segment or sit-down restaurant type of segments. But Darden had a great report this morning, but when you look at McDonald's, do you have any data that's signaling we could see a turnaround as inflationary pressures continue to ramp up for consumers?
Yeah, we absolutely do. We see, what I would consider probably the start of a trend in that, we're really seeing a pullback in the number of people talking about going to restaurants, sit-down dinners, and things like that. I think Darden's a little bit of an outlier. I actually expect the good news from Darden to wane over the remainder of the year because, as you can see on this chart, we're seeing that shift. It's not huge numbers, but it is different than where we were 6 months ago. And people are just going out to eat less and getting fast food more. Now, the downside for McDonald's is that this trade down effect also impacts what people get when they're in the stores. We're really seeing people, limit their menu choices, talk about, getting nuggets instead of the Big Mac that they used to get, trying to save money wherever they can. So it'll be very interesting as we move forward to see if McDonald's perhaps can report higher foot traffic, but a lower revenue per ticket, of people coming into the store. The other thing I would note, we really think McDonald's is in the best position of all the publicly traded fast food companies. You have to exclude Chick-fil-A because they're such an unbelievably great outlier. But among all the fast food companies, we really see McDonald's as a true champion here. Their ability to get people onto the digital ordering platform, their mobile app, has been fantastic. It continues to surge as people start looking for ways to save money. That app usage really translates into a consistent user experience. It translates into consistent traffic to the store and really trackable revenue for the company. And I think McDonald's is leading the pack, again, Chick-fil-A excluded, by leaps and bounds. So it's the best of breed among fast food, and we do see a tailwind for fast food in general.
Hey, Andy, how good of a proxy is McDonald's for the U.S. consumer and the economy?
Yeah, it kind of goes both ways. It's kind of like Walmart, I think, in a lot of ways. It's, if the U.S. consumer is strong, then Walmart and McDonald's can do pretty well. If the U.S. economy weakens, they can also kind of do well because of the trade down effect and people trying to save money. So I think, there are probably better gauges for the overall consumer out there. But when you look in total, I think that the people's move from sit down restaurants and more expensive meals to something like a McDonald's or fast food is somewhat telling that the consumer is getting significantly stretched here.
Yeah, and Andy, when you compare it, you mentioned Chick-fil-A leading the pack there, probably as far as happiness goes. But then you've got Wendy's, and you've got QSR, which has the Burger King and Popeyes franchises underneath it. When you look at happiness of McDonald's, I always feel like you mentioned Walmart. It's compared to Walmart a little bit. McDonald's seems the same way. People go there for the convenience, over 40,000 locations, right? It's a global footprint company. But at the same time, is it due to just the necessity or maybe the location of McDonald's as opposed to, hey, we're really happy with McDonald's, I'm going to keep going back?
Yeah, I think it's a mixed bag. I think that there's obviously, McDonald's doesn't have like a Chick-fil-A or, Five Guys burgers type of consumer response when people actually eat the food. But people are happy with McDonald's consistency. It's something you can count on no matter almost where you are in the world, that the experience, what you're going to get, on the menu what you like. and what you don't like and what you can tolerate, and it's pretty consistent across the board. So I think there is a level of happiness with that consistency, even though the food itself, the experience itself, may not blow your socks off.
Yeah, definitely consistency, I think, is what people enjoy, and the convenience here going into this. Now, they don't have earnings until like the 27th of April, so we're a far ways there. But according to your data, we're starting to see an uptick. What kind of earnings score would you have on this company if you had one today?
Yeah, we would be just slightly bearish. We're concerned about that overall ticket price, the amount of money they're making per user coming through the door. I think that the risk for the stock is probably a little bit to the downside from here, but from a long-term perspective, again, best of breed in a field that has an emerging tailwind. So like it long-term, but a little concerned short-term.
Yeah, I think that, it plays both ways in that aspect that, hey, it's convenient, but then lower cost entry point. And if inflationary pressures continue to ease, that might expand their margins a little bit too, even if the traffic diminishes a little bit. All right, Andy, great stuff as always, and great data. Have a good day.
Thank you, you too.
All right, that's Andy Swan, co-founder at LikeFolio. Joe, give me your breakdown here, McDonald's.